Yeah, so new heading, chapter 19, great. You can just call it depreciation. Obviously, depreciation relates to non-current assets. Okay, we know that assets like vehicles, equipment, machinery, those assets are depreciated. Okay, we'll define what it is, but you can keep the heading simple, just write down depreciation. Okay, perfect. Nice big heading. First bullet, let's define what it is. So what is depreciation? We know it relates to non-current assets, but how would you describe it?
Just when assets get old.
Correct. Okay, so the more we use something, the more it is depreciated. So first bullet, depreciation is the use of an asset being recorded. Okay, so you're basically taking the use and you're allocating value to it and you're recording it appropriately in the accounting records. Okay, the use of an asset being recorded. Okay, so if you know what is being recorded, what would you classify the use as being? Asset, liability, income, expense, capital, drawings. Which of the six? Good. Okay, depreciation is an expense. Okay, so do we have depreciation for a year? Would we have depreciation every year we've used the assets? Yes. Okay, so if I sum up all the depreciation from the start to the end, what would we call that depreciation?
Well, the depreciation from the start and the net value.
The accumulated depreciation. Okay, so next bullet. The total depreciation over the asset's life or useful life. Let's use the right vocabulary. Okay, in the textbook they talk about useful life. If something is useful, it can be used for a certain period of time. Okay, so the total depreciation for the assets. When I say assets, asset with an apostrophe S. Yeah, because it's one asset, but the assets useful life. The total depreciation for the asset's useful life is called the accumulated depreciation. Right, accumulated just means sum up and add up everything. Right, so if I've got an asset that's 5 years old, do you agree I'm going to have 5 years worth of depreciation? Does that make sense?
Yeah.
Perfect. Okay, accumulated depreciation is what type of account?
Also an expense.
No. Okay, you can't have an expense if you've got all the depreciation. Okay, so what does the depreciation do to the value of the assets?
What does the depreciation do to the value of the asset? It decreases the value.
Correct. It decreases the value. So accumulated depreciation is a negative asset. Okay, so let's label it. Let's give it a element. Right, so when you see the word accumulated depreciation, it is classified as a negative asset because it reduces the balance of your assets. Okay, very similar to what we spoke about earlier with bad debt and the provision for bad debts. Okay, so far you've learned about two negative assets. The first one was the provision for bad debts or doubtful debt, using what they've written here, and in this one is it's the accumulated depreciation that offsets the asset's value. Okay, so if I've got a 5-year-old asset, I'm going to subtract 5 years worth of depreciation. Okay, next bullet. Okay, next bullet. What is the difference between the cost and the accumulated depreciation? Do you remember? Cost, not quite, because let's write down the equation. Write down cost minus accumulated depreciation equals something. We'll put in the something just now. Cost minus accumulated depreciation equals. What do we call that? What's the net amount called? So if I have the cost price of the asset and I subtract all the depreciation for the asset, what will I land up with?
What's left is the value.
What value? Almost.
Net value.
Carrying value.
Oh, yeah.
Okay, carrying value. Right. So that's the big word that we need for the depreciation calculations. Okay. Carrying value. Right, so we've covered that. We've spoken about what depreciation is. You know it's an expense. Okay, maybe just a note about the useful life, just as a separate bullet. Useful life refers to the number of years you can depreciate the asset for. That's what the useful life is. The textbook talks about finite and infinite. Okay, if it's finite, there's a limited lifespan. If it's infinite, there's an unlimited lifespan. Okay, but all assets should have some sort of end, okay, in terms of their life. So it's not the best of... useful life refers to the number of years the asset can be used for. Okay, the textbook also talks about factors that affect the useful life. Some assets have longer useful lives than others. All right, so for example, a vehicle would, inverted commas, last longer than a cell phone or a laptop. Okay, because a vehicle is an asset that should last longer. Or machinery. Okay, machinery could last longer than other assets. No, land and buildings would be the longest.
Yeah, that's what
yes.
Last longer.
Yes, okay, land and buildings would last longer, yes. Okay. Right, so they talk about a little bit of that there, which again is theory. I don't think they'll test that. What we do need to look at is the different methods. Okay, so another bullet. 3 methods for accounting for depreciation. Okay, so this is looking at straight line, diminishing balance, all of that. Okay, you've already looked at those 2. 3 methods for depreciation. For calculating depreciation, actually. Okay, so method 1, straight line depreciation. That's the first one. You can label these 1, 2, 3, 4. Well, there's only 3. Number 1, straight line depreciation. Okay, again, revision, we've seen this before, but there is something else to consider that we haven't really looked at before, which we'll make a note of now. Okay, this textbook's much better than last year's because they give you a nice formula as well. Okay, alright, so straight line depreciation, what do you remember?
Straight line depreciation is the easy one.
Does it change? No. Okay, so that's the first thing. The same every year. Straight line depreciation is the same every year. It doesn't change. Same amount every year. Okay, in brackets you can say it's regular. All right, it's a regular amount that is going to be processed every year. Okay. Right, how do we calculate straight line depreciation? Well, there's a formula. Okay, you can actually just copy that straight in the textbook. I'm going to discuss what a residual value is, but let's just write it down first, and then we can write notes afterwards. Okay, so that highlighted formula in the textbook, write down the exact same thing. But annual depreciation charge equals numerator, cost of net non-current asset minus any residual value, divided by number of years. Okay, got that? Okay, almost. Yeah, so that's how we calculate depreciation using the number of years. Will you always have the number of years? Not always. Sometimes they'll give you a percentage. Okay, so we need to also write down that formula. Okay, so you've got that one. Just put in the fraction, the numerator, denominator. Okay, then you can just write down or, put a big or. The other formula would be brackets, open a bracket, Cost minus residual value, close that bracket, times it by percentage. Okay. Maybe just circle the word or circle the symbol, circle the percentage symbol. Okay, and just put an arrow at the bottom. Okay, and just write down depreciation rates. Okay, so sometimes a question might give you 20% per annum. Sometimes they might say depreciate over 5 years. Okay, do you agree 5 years and 20% per annum is exactly the same?
Yeah.
Okay, so e.g., just on the bottom line, e.g., 5 years depreciation amounts to 20% per annum. Right, so it's the same thing. Okay, because 100% divided by 5 is how much? 20%. Okay, so that's how you can do the conversion. Right, so you're actually given choice in terms of the calculation. If you like to use years, then use years. If you like to use percentages, use percentages.
Yeah.
Okay, so 100 divided by 5 is 20% per year. Every year you'd be depreciating the asset for a fifth, basically. Okay, does that make sense?
Yeah.
Alright, great. New page. Okay, you're running out of space there. Alright, so we've covered that. We need to describe what this whole concept is. Okay, residual value. So you've written down, number one, straight line method. In the straight line method, actually all methods will have a residual value or possibly have a residual value. Right, if there is a residual value, we need to describe what it is. Okay, you're already writing 2. Okay, then let's write it down later. Okay, because residual value is a separate note. But don't worry. Okay. No. Okay. All right, but it's fine to write down 2 because 2 is just the different methods. Okay.
So residual value.
Yeah, just a note about it. Okay, so what do you think the residual value refers to? What does residual mean?
Yeah, the actual value.
Residual means what's left over. Okay, so residual value is the inverted commas scrap value. Okay, they've even used the word scrap value in the textbook, which is good. Okay, inverted commas, because it's not the right way of describing it, but it's the best way of understanding it.
Yeah.
Okay, so do you agree? Let's say I've got a machine. Okay, let's say like you guys are using some equipment. Let's say like equipment. This air conditioner.
Yeah.
Okay, so this air conditioner is a form of a fixed asset. It's a form of machinery. It's equipment. Okay, so do you agree that this thing will probably last in terms of useful life for maybe 5-10 years? Okay, but at some point in time, this machine is going to fail. Okay, so there's going to be a part inside that's going to fail, and the machine won't work any longer. Right, but can we still scrap the asset? Yes. Okay, we could take that and we could take it to like a scrap yard. Right, and because of the metal or the plastic or whatever's in that thing, someone would be willing to give you a very, very small amount called the residual value or scrap value. That's what it is. Okay, so to describe that, you can just say the bare minimum that can be received for the assets. Okay, it's literally like what the asset is worth if you had to scrap it today. Right, so if we have to take a vehicle, for example, that's probably a better example. Okay, because a vehicle has metal. Okay, metal is worth more if you can recycle it. Right, so the scrap value of a car would be, well, let's take it to the scrap yard, they crumple it up, they take out all the metal and then they sell it. Right, so that's basically what you're looking at. Okay, so all we need to remember there is that the residual value will not be included in the calculation. That's why you subtract it. Okay, so you can make a note there. Residual value is taken out, highlight it, and then highlight the minus in your formula. Okay, you just write down residual value is taken out. It's always taken out. It's never included because it's assuming that you are going to get something back for something. Okay. Residual value is excluded. You can just keep it simple. Excluded. EX. Yeah. Right. Highlight the word excluded, and then in your formula, you can highlight that minus residual value in that equation you wrote down earlier. Where's it? Yeah, there's it. Just highlight the minus residual value. Okay, that's why we're looking at it. It's something that we need to offset. Okay, now you can write down number 2. Reducing balance method. Okay, that's how they describe it in your textbook. Diminishing balance is the same thing. Different textbooks talk about it differently. Let's use what they've got here. Reducing balance method. Okay, we've looked at examples of this previously. We'll do more examples on Friday when we look at the actual assignment, and then we'll cover that in detail. Let's summarize what the residual value, not residual value, what the reducing balance method involves. Okay. Right, so first bullet, depreciation is calculated on carrying value. That's the most important thing. Depreciation is calculated on carrying value. Do you still remember how to calculate carrying value?
Well, when you tell me.
Okay, we spoke about it earlier. It was?
It's your cost minus accumulated.
Good. Let's recap that. So just underneath that, write down CV equals, carrying value CV equals what you just said, cost minus accumulated depreciation. Perfect. Right, next bullet. If a residual value is given, we must take this off as well. Okay, that's important. Right, so it's the same as before. If you had a residual value for the straight line method, you take it off. If you have a residual value for the reducing balance method, you take it off. Okay, you remove it. Okay, subtract it, minus. Right. Same thing happens here. Okay. Right, there is another method, but I see they haven't given you any examples. I don't think you'll be tested on the revaluation method. They talk about it here, but there's nothing really substantial. Okay, we'll describe it. So number 3, put a heading, revaluation method. That's the last one. Okay, which is a new method because we haven't looked at the revaluation method before. So this is something different from last year. Okay, straight line and reducing balance you probably still know how to do, but we will look at examples and it'll refresh your memory. Okay. Alright, so if you're looking at the word revaluation, what does the word revaluation mean?
To reevaluate something.
Exactly, to check what the current value is of the asset. So, do you agree, sometimes the asset can increase in value?
Yeah.
Right, so, well, land and buildings, we would expect that to increase, hopefully. Alright, not in all instances, but in most instances. Assets like equipment, computers, laptops, TVs, vehicles, furniture, these things generally depreciate. But sometimes they also increase in value. Okay, maybe this table is like a designer table, and maybe in a year or 2 or maybe 20 years, then someone might say, well, oh, this is something unique, and the value that you bought it for when you bought it for is actually less than what the current value is because somebody likes the design. Okay, that's what you're looking at. Okay, so just put a note there, revaluation method. Revaluing an asset means to take its current value. That's what you're looking at. Revaluing an asset means looking at its current value. Right, so it's all about current value. How much is the asset worth to us today? That's what you're looking at. Right, so do you agree you could also revalue an asset and look at the revaluation as the depreciation? Do you agree? Okay, so let's say the laptop is worth, I don't know, 10 today and tomorrow it's worth 9. Okay, what does that mean? It depreciated by 1. Does that make sense? Okay, the vehicle could be worth 100 and now it's worth 90. Okay, so all the revaluation method is looking at, it's the current value. It's whatever it is. Okay, and the value can go up or it can go down. Okay, we would expect value to decrease. That's what we would expect. Okay, sometimes it can go up, but generally it would go down. Right, so just put a note there. Or let's put an example actually, because it's new, it's different. E.g., let's put an example, e.g. Value at 1st January 2018. Value at 1st January 2018 is equals or is, yeah, it doesn't matter. Let's use simple numbers. Let's say 5,000. Okay. Next line, value at 1st July 2008 is 4,500. What can you assume that happened?
Depreciation.
Perfect. Okay, so now maybe a different color, maybe use blue again and just asterisk it. Using the revaluation method, we would assume 500 Rand depreciation. That's what we're doing. Okay. And that's how it works. Right, so it's not a very difficult way to value or depreciate an asset, but it's just not the best way because it's very inconsistent. Okay, because remember, a revaluation is looking at someone's opinion on what something's worth. Right, so you might think, well, your table is worth X, but someone might think it's worth more. Right, so now someone might have a different depreciation rather than let's just depreciate this thing 10% a year, okay, or 5% a year, depending. Right, does that make sense? Okay. Right, the last bit of theory we need to look at is the sale, which is the asset disposal. Okay, and that's the end of this chapter. See, it was quite short. Right, we'll look at examples on Friday. I did see a nice question in the assignment. Okay, so don't do it ahead of time because we need to revise as we go. Okay, so on Friday we will discuss all of that in detail. Okay. We're definitely gonna do an example for this one. Okay, because this is important. The revaluation, the depreciation, we can look at examples later. Alright, so yeah, you're going to need quite a bit of paper just to do the last bit, just to summarize and to also put a T account. Okay, you can put a heading for this. It's still dealing with this chapter, which is the depreciation of non-current assets. Okay, so heading for this would be the sale or disposal of non-current assets. And remember, we're looking at non-current assets. So we're not looking at inventory. If you sell inventory, that's something separate, that's sales. If I sell the vehicle that we're using, that's a disposal of an asset. Okay, so two very different concepts. The one looks at selling goods that you buy and sell, that's sales. This is looking at the disposal or sale of an asset that you own, that you're using. Okay, so let's sell the car, let's sell the table, let's sell the equipment. Okay. Alright, so let's see. Let's summarize what they've got here. Okay, first bullet. If you're selling an asset, what value do you need?
The starting value.
No, you wouldn't. You would need the carrying value. Okay, because you need to know what the asset is worth the day that you sell it. Do you agree? Okay, that's the first point. Okay, so bullet number one. You need the carrying value at the date of sale. That's very important. Right, because that's why you depreciate assets until that day. That's the day that you sell it. Right, need carrying value at date of sale. Right, then you would either use straight line diminishing balance or revaluation method. Okay, you'd have to work out the carrying value. Again, let's just recap that formula. It's very important. CV equals, you can abbreviate even, cost minus ACC accumulated DEP, depreciation. Perfect. Right, the next bit, the textbook is actually quite good because they give you a few steps for the disposal. Right, so we can write them down. You can say asset disposal steps. Asset disposal steps. Okay, I'm going to show you with an example what we mean, but let's write down the steps. We'll summarize them. Number one, draw a T account. Number two, transfer the cost of the asset sold. transfer the cost of the asset sold. You'll see once you've done enough exercises, you don't even have to remember the steps, okay, because you'll know if I'm selling the asset, I need to get rid of the costs, I need to get rid of the depreciation and so on. Okay, transfer cost of the asset sold, perfect. Number 3, provide for outstanding depreciation at date of sale.
Provide for outstanding
depreciation at date of sale. Alright, so if I'm selling an asset, I need to provide for the outstanding depreciation. I need to know what it's worth. Okay, number 4, transfer accumulated depreciation. Transfer accumulated depreciation accumulated depreciation. Okay, number 5, record the proceeds from the sale. Record proceeds from the sale. And the last one,
sorry, what do you mean by proceeds?
Proceeds is what you receive from selling something. P-R-O-C-E-E. D-S. Yeah. Okay, in proceeds you can put brackets, selling price, just to make sure that you're okay with that. Yeah. Okay, so if I sell something, I'm going to receive proceeds from the sale. Okay, the proceeds from the sale is how much I receive from the asset that I sold. Does it make sense? Okay, and then the last point, where are we? 6. Yeah, last one. Calculate the profit or loss on sale, and that's the asset disposal. Calculate profit or loss on sale. Okay, just with that, we need to look at when do we have a profit, when do we have a sale. So you've got those 2 words. Profit, maybe draw an arrow and then put a formula, and then the same thing for loss. Do an arrow and then put a formula. Okay, so profit, when would you receive a profit? When your carrying value is more than or less than your proceeds?
Less than.
Correct. Okay, so that's it. Let's write that down. So you can use the greater than equal sign. For profit, you can say proceeds.
So for profit?
Yeah, just write down proceeds. The crocodile needs to eat the proceeds, so greater than, that way, carrying value, CV. Right. And then on the next line, write down, on the next line, underneath proceeds greater than carrying value, just write down profit on sale. Okay, because that creates a T account, then you'd have to record that in your books. Right, perfect. On that side, do the same thing, proceeds, but then do the less than sign. Proceeds less than carrying value. And then loss on sale. There you go. Okay, you've got those 2. Okay, then just one other note. As a separate bullet, they talk about this treatment of a trade-in. Okay, just put a separate bullet, just write down trade-in. You can underline that, or 2 dots, either or. If one good is traded in for another, this is treated like a asset disposal. Okay, because it's the same thing. Right? Whether I have the old asset or whether I sold the old asset, if I trade in the asset, I'm still, inverted commas, disposing of it.
So if one good is traded in for another?
It is still an asset disposal. Okay, you still do the exact same process. You do step 1 all the way to step number 6. Okay, that completes all of the theory. Now we just need one example, and then we're done for today. Okay, right, new page? Yeah, definitely. Okay, you've got theory there. Let's just do one example. Yeah, keep that there because you're actually going to use it. Right, so we need bits and pieces of information. So I'm going to keep it simple. You can just write down bullets, e.g., write down an example at the top so we know this is an example. Okay, first bullet, cost equals 10,000. Okay, accumulated depreciation 1 January equals 1 Jan equals 1,000. Okay. Second line or second bullet, a bullet each of these because it's bits and pieces of information. This is what you would take out from the question, okay, whatever the question is. I'm just keeping it simple. Right, second bullet, straight line depreciation, 20%. Straight line depreciation, 20%. So now we know what we're using. Okay, second bullet, fourth bullet. Assets sold on 1 July. For, let's say 9,000. Okay, so we sold it for 9,000. Let me just see if we've got everything. We've got a cost, we've got an accumulate, we've got a straight line, and we've got a proceeds. We've got everything, great. Okay, so how do you do an asset disposal? What is the first step? Draw a T account. Okay, so draw a big T account. You'll probably need about 6 lines or so. Okay, so this is how we do the T account. Yeah, you'll need workings underneath the T account, so leave some space, but yeah, 6-7 lines should be more than enough. What are you going to label this? Yes, I just want to see if do they give a specific name for their accounts. If they do, okay, they don't even have an asset disposal T account. They give you T accounts for the others. Okay, here, okay, they do it linear. They don't do it as a T account. But then maybe here, okay, here they do. Yeah, they do. Okay, they just call it disposal. Right. I didn't write down what this vehicle was. Okay, let's just say it was a. It doesn't actually matter. The cost, it could have been any asset, do you agree? It could have been vehicles, machinery, it could be in anything. So we can just put a heading there, disposal for the assets. Or disposal, yeah, heading for the T account, disposal of the assets. Okay, that's what they use in the textbook. Alright, perfect. Okay, so what's step number 2?
Transfer cost of assets sold.
Okay, so now I want you to draw a small little T account underneath just to show the cost. Okay, so mini T account, yeah, half the page is small enough. Small 2 lines is enough. Okay, where would this cost be, on the debit or credit side?
Debit.
Yes, okay, so write down balance 10,000 on the debit side. Okay, we need to color code this. Alright, so how am I going to take that cost to the disposal account?
Credit.
Yes, good. So in whatever color you want to use, credit the 10,000, write down asset disposal. No.
Oh yeah.
Yes. Okay, because you're closing that account. Okay, it's 10,000. The description, disposal of assets. Okay, because you're writing down that contra account heading. Does that make sense?
Yeah.
Okay, so is that account closed? Yes, you can just put 2 lines underneath it. You don't even have to total it.
What is the name of this T account?
The name of that T account would have been assets. Okay, it could have been vehicles, land, whatever. Okay, I should have given a name, but I didn't. But you can just call it assets. Okay, you can replace the word asset with anything. Okay, perfect. Now, where are you going to put that credit?
Disposal.
Yes, but which side?
Debit.
Good. Okay, so on the debit side, you would write down 10,000, and the description would be asset, because the contra account heading for the account was asset. That's it. Okay, perfect. Step number 3, what is it?
Provide for outstanding depreciation at date of sale.
Good. Okay, so do we have depreciation up until 1st July?
Yeah.
No, we've only got depreciation for 1st of Jan.
Yeah.
Do you agree? Okay, so underneath your T account, let's do another working. Say working for 0.3. Working for 0.3. Do you still remember how to calculate depreciation for half the year? Okay, let's do it. Okay, so the calculation would be, what method am I using? Straight line. Alright, so straight line, you calculate depreciation or what? Carrying value or cost?
Cost.
Good. Okay, so what is the cost of the assets?
10,000.
Good. So you can write down 10,000 times by, what's the depreciation rate? 20% times by, how many months do we have?
12
6 months, good. So 6 over 12. Perfect. What does that give you? Do you have the calculator? 10,000 times 20% is 2,000. Half it should be 1,000. But let's just double check it, just to make sure. Times. Yeah.
2,000.
Divide by 2, or times by 6 over 12. Either or. Yeah, it's 1,000. Okay, so that's the answer. Okay, so what are you going to do? You're going to add depreciation. So next to that 1,000, write down DRCR, debit credit. Okay, so I can show you debit and then credit underneath. Remember the workings here. Okay, just cross out the credits. Okay, debit and then credit. Good. Okay, when I have depreciation, what do I process? What's the transaction for depreciation? Do you remember?
Depreciation is an expense.
Good. Perfect. There you go. Debit depreciation. Credit what? Accumulated depreciation. Makes sense?
Yeah.
Right. Right. Coming back to here, next to your asset account, draw another T account. Right, you need to label that accumulated depreciation. That one you'll need a few more lines. 4 lines should be enough. Okay, perfect. Accumulated depreciation. Right, does accumulated depreciation have a balance? What was the balance? It's in the question.
No, it's in 1,000.
No, it's in the question. Accumulated depreciation?
1,000.
Yes. Okay, so highlight that, and then highlight the balance in the question. Okay, so we're recording it. Right, where would you put accumulated depreciation? On the debit or the credit side?
Debit.
No.
Credit side.
Why? It's a negative asset. Good. Okay, so on that side, credit side, put the word BAL, balance, write down 1,000. Right, what did we just work out? We worked out depreciation for the year. So what are we going to do to that account? Increase it or decrease it? What did we have as the working? Debit or credit?
Debit.
Credit accumulated depreciation. So you highlighted that. Highlight this as well, the balance. Okay. All right, and then highlight the accumulated depreciation credit there. Highlight the credit account.
Color.
Yeah, different color is fine. And then write down 10,000 here as well. Okay, there you'll write down depreciation, 10,000. Depreciation, 10,000. Highlight that in yellow as well. Sorry, I said 10. I should have said 1. Sorry, too many zeros. Okay. All right, perfect. Okay, so now what is step number 4?
Transfer account depreciation.
Good. Okay, so how much depreciation does this asset now have?
2,000.
Good. Okay, so put a line and put 2,000 because we're totaling. Okay. Do we want the same on both sides? Yes, so same on the other side, 2,000. Okay, so how do I get rid of 2,000? Debit or credit that account?
Credit. Debit, sorry.
Debit that account. Good. So you would debit that account and write down asset disposal, 2,000. Okay, that's the debit. Where is the credit going to go? Very good. Okay, so the credit is going to be there.
Asset disposal.
No, accumulated depreciation, because that's the contra account. Does that make sense?
Yeah, it does.
Right. Accumulated depreciation, 2,000. Right, next step.
Record the proceeds.
Good. Okay, what are the proceeds?
The selling price.
Did I give that? Yes, I did. Assets sold 1st July.
9,000.
Good. Okay, so what are you going to do for that? Maybe just at the bottom of the page, just as a working, if I sell an asset for $9,000, what am I going to debit, what am I going to credit?
You're going to credit the asset.
No, you'll credit the disposal,
Yeah.
and you'll debit the,
asset.
which asset? The bank. There we go. Okay, so just put a note there. Or even maybe put it next to this even if you want to.
Okay.
Debit bank, credit, asset disposal. Right, that relates to what? The proceeds. Does it make sense?
Yeah.
Okay, so record that in the asset disposal. What are you going to do to the asset disposal account?
I'm going to debit bank.
You're going to debit the bank and you're going to credit the asset disposal. Okay, so asset disposal must have a debit or credit.
Credit.
Good. Okay, so on the credit side, you're going to have 9,000 and you're going to reference that bank. Make sense?
Yeah, please.
Good. Alright, now, what's the last step?
Calculate profit or loss on sale.
Good. Okay, so now you need to put a line. So skip 2 lines for the asset disposal and draw a total line, yeah, on both sides, and then we're almost done. Okay, will an asset disposal account have a closing balance? Never. Okay, because what is the purpose of this account? It's to do a calculation and that's it. Does that make sense?
Yeah.
Okay, so you'll never ever have a closing balance brought down, carried down, it just won't exist. Right, so which side is bigger here?
This one.
Correct. How much is that side adding up to? 11,000. So write down the totals. 11 on that side, 11 on the other side. Okay, so what is the missing figure going to be? 1,000. So on that side, you're going to put 1,000.
Over here.
No, over there, like 1,000. Right, and now we need to put in the actual amount. So now we need to think about how much is the asset worth and how much did we sell it for. Okay, so this you would do a separate calculation. So at the bottom, okay, just write down carrying value equals, CV equals. What was the cost? Write down the whole thing. Cost minus accumulated depreciation. Okay, let's fill in the amounts. Right, next line, CV equals. What is the cost? Yeah, it's in your working. So we're just taking things from the actual working. And what is the accumulated?
2,000.
Good. So what is the carrying value?
8,000.
Perfect. Okay, did we sell the asset for more or less than the carrying value?
More.
Good. So is that a profit or a loss?
Profit.
Perfect. Now you got it. Okay, great. Right, so now we know how to call this. We're going to label it what? Profit on sale of the asset, and that's it. Okay, so next to this, write down profit on the sale of the asset. Profit on sale of assets.
Okay.
Right, and that's a disposal. Right, so obviously you would have different scenarios. So I'm going to give you some homework. So on a new page, okay, I want to see if you'd be able to do the exact same thing. Okay, but now I'm going to just give you, yeah, don't leave that page. We're going to do the same example. So I'm just going to give you this top part and then you're going to do the rest. Okay, so one example for you to try. Cost equals 12,000. Accumulated depreciation 1 Jan. Equals 1,000. Straight line depreciation 20%. Right, and then last point. Assets sold,
Sorry,
first
20%,
line, yeah, 20%. Second line, or fourth line, assets sold 1 July. $6,000. Right, so there's the information. Okay, so all I need you to do is draw up a T account. So a question like this would only have a T account. You don't have to worry about all of this. This is the workings exactly. Okay, so if you can just draw a T and just label it disposal of asset, and that's what you're going to have to do. Okay, and then we'll discuss that on Friday just to see if you're okay with this whole concept of disposal. Right, because it is something that comes up quite a bit because you're going to have to process the assets value. Okay, and that's it. Another chapter complete. All right, so we've covered 13 and 19 today. Friday we will start with assignment 2. Okay, so bring the assignment book as well, and just bring everything. You've got everything, which is great. You've got good notes as well, and then we'll start looking at the questions there. We'll practice the concept that we've covered so far. Okay, great. Well done. Good effort. Nice return. You remembered a lot. So.